the more I learn, Bruce, about what you do and how big your firm is, the more I discover you're in so many businesses. And with $750 billion of assets under management, it's everything from hydro, solar assets to an insurance company and a credit company, retail, real estate, hospitality, the Atlantis Hotel in the Bahamas. What am I missing? Energy companies, infrastructure plays.
I think you can give the speech.
Okay. So you touch a lot of things. So maybe a broad question, and you see the world and the economy through so many different lenses. From your vantage point, how are things looking?
So look, the world, Sarah, is it's volatile. But I would say these periods of time consolidate. It's like in every product that's out there. It gets, things are high, things consolidate, but what we own are real businesses in real economies across the world, and these are great businesses to own for long periods of time. So we've always tried to take a really long-term view to things, and you see the other side, and yeah, it's volatile today, but it's going to be better at some point in time, and we're probably going to have a recession.
In the U.S.?
Yeah, probably. I don't know, but it'll be a light one.
Nothing like great financial crisis.
Look, it's not. It's maybe not 2001 when we had everything behind the globalization going on and what happened coming out of the crisis then, but household balance sheets are good. Corporate balance sheets are good. The froth was in the stock markets, which a lot of that's been taken out, and I'd say, ex-Europe, which is going through its own difficulties, the world is generally in a pretty good economic situation to go into a downturn, and I think that's unlike. 2007, there was clearly a massive problem in the banks, and that came out, and housing, and so you can pick each crisis, and they always have a different reason. But today we're in pretty good shape in the United States.
We do have an inflation problem.
Look, yes, we do. Again, I'm on the positive side. The Fed did not know how to deal with deflation. They didn't know how to deal with a pandemic. No one in current times had ever dealt with that situation. They did what they did, and I think they did an excellent job. They may have inflated too much, but they really know how to crush inflation if they want to do it. There's a balance between crushing inflation and not having a recession and causing problems in the labor markets. And that's really what the delicate balance is. The good news is everybody in the central banks in the world know exactly how to deal with this situation.
Are you sure?
Yes, for sure.
You do have a very prominent central banker working for you as well,
and
Mark Carney.
He's taught me my lessons. He told me he knows what he's doing. But they know what they're doing. They're just trying to. It's just a balance, and they don't want to cause. They want to solve the situation, but they don't want to cause problems in the markets. And that's really what they're trying to thread, I guess, right now. But they know how to deal with the situation. And that's unlike 2.5 years ago. Nobody knew what to do, and they made it up. And I think they did a really good job.
Yeah. Now they know. It's the playbook. Raise rates. How does that affect what you do? How does it affect deal making, for instance?
Look, deal making's down everywhere. Just as a comment, but
it's not dead though.
No, it never is dead. These are amazing opportunities to look. We have $110 billion of cash and available capital to put to work. We're still doing deals across. We just did a deal with Intel last week for $16 billion to buy half of their fab plant. So we're still doing deals, but the environment, I guess, and I would say part of that is because. Or part of my reason for being happier about it is 80% of the things we do benefit in some way from inflation going up. It affects revenues in some way. Our infrastructure assets are CPI adjusted. They get contractual increases in revenues. Our renewable power plants revenues are going up because of what's going on in energy. Real estate, ultimately, values are going up because replacement cost is going up. So all these things are affected. They're positively disposed to inflation.
Travel.
And as a result of that, I'd say generally the cash flows are going up. Therefore, we can be relatively positive in this environment. There are some businesses which aren't that way, and they're getting hit harder. But in deal making, there's no doubt what's going on in the financing markets with interest rates is affecting deal making everywhere in the world, and particularly in the United States.
Right.
Where they're most robust, you know that, where the most robust markets for deal making always is, because it's the largest economy in the world by far.
Where are the best valuations? Because I think of you as a value investor, right? That's sort of your posture. Do you think of yourself that way?
Yeah, look, I'd say the answer is yes. Yes, we base everything, and I'm going to make a nuance to that. Value investors usually think you're buying everything deep value. We're long-term thinkers and long-term cash flow business investors, which means we're trying to own things which we can see growing cash flows over the long term. And we try to buy them right. The greatest thing you can do in doing the things that we do is buy them right. You need to operate them well, you need to once in a while sell things, but you need to buy them right. So it's hard to earn a return if you pay 2 times what you should. And buying them at 80% of replacement cost or 80% of what the long-term value is always highly positive to earning a good return over the longer term.
So I would think we're in a good environment for that.
Yeah, look, these are excellent times for those with capital and franchises. And what happens during times like this is consolidation occurs in every single industry that's out there. And many of the businesses we have within our funds, within our pools of capital, we're consolidating, we're doing add-ons, we're buying other businesses, capital from limited partners around the world, and our clients, it consolidates to those they know and those they deal with in scale. And we raise $100 billion a year from institutional clients, and that gives us a special relationship at this point in time. And people tend to go to what they know during times like this.
So 2 questions out of that. So you're not having trouble fundraising in this environment, sounds like. You just raised...
You said you had 2.
Well, and my other one is, where are those deep values you have to buy right now?
So we've had no issues fundraising at all. Probably, again, back to what do we do? We just raised $15 billion for transition investing, which
What's
is...
transition investing?
Transition the economy to net zero. So it's renewables, building renewables. We're one of the largest owners of renewables in the world, solar, wind, hydro. But it's also funding companies to help them transition to net zero. So get rid of carbon out of their industrial operations. So we raised $15 billion for that. We just did a first close of $20 billion for our infrastructure fund. It'll be much larger by the time we're done. We're just closing off our latest real estate fund, which is targeted $17 billion. We just did a first close of $8 billion for our private equity fund. So I would say some are having issues raising money, but largely it's related to growth technology and some buyouts, but our buyouts are industrial and services, cash flow businesses revolving around the real economy, like the other stuff we do. Therefore, I would say in general, people are coming to those. They need to put money to work.
Yep.
And they're coming to things that are disposed to inflation and disposed to real cash flow businesses.
And not the stock market.
Look, the other benefit people get with alternatives, which we're now pushing those alternatives from institutional down to wealth products. The other benefit you get is you don't have the volatility. And I say that people often say, well, it's real. And the problem is with the stock market is if you own a stock, you own a piece of a business. But the stock market distracts everyone. It distracts you that you own a business. I build whatever I build, and I sell it. And the stock market going up and down, it confuses you. You actually own a business. You sell goods. You earn revenues. You have costs. And the stock market just distracts you. So the more that we push, and I'd say increasingly, and this started 30 years ago, we started talking to institutional clients, putting products into their funds. And it took a long time for understand, but some of our clients are up to 60, 70% alternatives within their portfolios. Wow. Many more will be going to 60, 70% because it's just less distraction. And only now are we starting to put them into wealth products for individuals. And I think that's really good too, because it's going to change, it just changes what happens in the marketplace and what people think.
When you think about where the value is right now, you mentioned some of the hard-hit parts of the market, technology. You're not that exposed there, but is it a place you'd like to go because of what's happening with valuations?
You said earlier, we're value seekers. Yeah. And the world is moving towards technology everywhere. Every one of our business has been pushing more tech. We've been pushing more technology into it. We've been buying cash flowing businesses in technology. We just bought a software business that runs car dealerships in the United States. Most of the car dealerships run on our software in the US. So we've been pushing more into technology. And I would say this period of time, what's really exciting is we're going to get the opportunity to push greater into technology. For the first time in 15 years, it makes sense to us. Because we're long-term cash flow investors, often growth disrupts our thinking, and it's just not us. And right now, there's some great opportunities to head towards that, and we're going to keep pushing.
So I'm wondering where the check to Elon Musk fits in to help him buy Twitter.
I have no comments on the deal, but what I'd say is he has been a partner of ours in a number of ventures, been an excellent partner, and we were supporting him in the investment, and we thought it was a good investment. So we'll have to see what sorts out. There's a bunch of things going on, so I won't make any other comments.
Right. You have to be a lawyer, or I don't even know, a fortune teller to predict what's happening there. Bruce, what about Intel? The Intel deal that you mentioned is pretty interesting. So you are funding a new plant in Arizona as Intel and others want to make America a semiconductor manufacturing hub. How does this deal come about, and is this going to be a template?
Yeah, so there's three big things that are happening in the world, and this is tens of trillions of dollars. Digitization, the reshoring of technology back to countries, and energy security, and the transition to the net zero economy. These are enormous, enormous amounts of money. And so this is why I'm excited about putting money to work, and all the things we're doing is these trends are enormous and they need to be done. And the reshoring of technology is happening everywhere in the world. 65% of chips are made in Taiwan today. We can't have 65% of chips made in Taiwan. The US government, European governments have put money up to support businesses bring chips back. We are helping Intel with their plant in Arizona. It's a $32 billion plant. We're investing in half of it.
So you get half the revenues?
We have an arrangement on the revenues with them. Remember, they know what to do in chips. We're bringing capital. So it's their business. This
industry is going to need a lot of capital.
It is their business, and we're supporting them to do it. This is $1 trillion needs to get invested in the Western economies to reshore semiconductor chips, and it'll be invested over the next 10 years. They can't do it on their own. So we approached them and we came up with this idea, and it worked, and I think we'll do it hopefully many more times with them and possibly others, because this is an enormous amount of money that needs to get invested. But on top of that, what's going on with 5G around the world is enormous, and solar and wind technologies are now the lowest cost energy in the world in almost every single country, and they're energy security free because they locate in the country. You don't need to bring it in. And as fast as this can get built out everywhere in the world, it's getting built. Europe in particular, but everywhere. And it's carbon free. So it's, these are enormous trends. Like we're big, but we're just this small. In this, there's a lot of money that needs to go to work.
Yeah, I was going to ask you where we are in the energy transition, especially at a time where we need fossil fuels more than ever.
No, look, everyone, the point I would make, and we try to make, what I said is we created a transition fund. What's really important there is the word transition. This is not about good, bad, fossil fuels, renewables. It's about transitioning from the world from here to somewhere over here. And we're helping companies go from here to here. That's just as good as from going from starting at here. And so our money is increasingly is helping corporations move across that compendium. And it's a transition. It's going to happen a long time. For the time being in Europe, yes, we're using a lot more fossil fuels, but they're doubling down on local energy, and there are only 3 sources, other than if you have local natural gas. There's only 3 things in the world that brings you national security. Solar, the sun comes down; wind, it's in your country; or nuclear. Those are the only 3. And countries are going to double down on all 3 of those many, many times, and that's where there's an enormous amount of investment going to get put out over the next 20 years.
So where in the world is most appealing to you? Because one of the things you've done is you've diversified through all these industries into 30 different countries. But we're in a fractured kind of world where globalization is moving in a slightly different direction than we've seen.
Yeah, so look, for I'll call it Western investors, largest scale of capital on the planet, Europe and the United States are the 2 biggest places to invest money, and that's going to be the case for a long, long time.
So Europe issues, you see a short term?
Look, Europe's a massive economy. It's going to have very deep issues for the next little while, but there's going to be some amazing opportunities that come out of that. So we're quite excited. We've been buying businesses in Europe now, and we'll keep buying. Despite all the issues, when you come through the other side, often these are the great times when you should be buying.
Are you buying in China?
Do you know, we have on a relative basis, we have a small business in China. We continue to build. We have solar wind plants there. We do real estate. We're selective, but we keep building our business out in China.
Because it seems increasingly complicated to be an investor and be bullish on China.
The only thing I'd say is we're in 30 countries, and we're locals in 30 countries. Often we source our money in the country. We invest it for those clients. We apply our skills, and we help the clients invest their money. And whoever wants to go to that country, we invest for them. We don't trade across borders. We're not selling chips from place to place. We're maybe financing somebody to do it, but our business itself, we're local in a country. So we can be a little different than most companies that have complications country to country. We're just a local in each country.
Got it. We've been talking a lot about investing opportunities. For your investors, you're also undergoing a pretty interesting shift. You're doing this listing of a quarter of your asset management business by the end of the year. Talk us through that. Yeah,
so we started our alternative manager circa 25 years ago from nothing. Today it's worth put a number on it, 75 billion, somewhere in there, 50, 70, 60, 70 billion. It's mixed into all the capital we've accumulated over 30 years. So we have 100 billion of capital in an asset manager. We're going to list 25% of it because we think it will open opportunities for us to do other things with the manager, and in addition, it should show the values of what we have. So we'll see. It doesn't change business too much because all we're doing is giving our shareholders 25% of that entity, so we can easily achieve it even in this marketplace because we don't have to ask anyone to do an IPO. We're just distributing the shares to our owners, and afterwards our owners will own 25% directly, whereas they owned 100% of it within our corporation.
And along with that, you've made some changes in your senior staff.
Yeah, look, our belief is bring along young people in your organization as fast as you possibly can, let them grow, and you'll all be better for it. And we keep these points in time are great opportunities to advance the efforts in that regard, and we've done that with this announcement.
I was going to ask, are you talking about succession planning? You're a young man, Bruce, but you've been leading this company for 20 years and built it into what it is.
Yeah, yes, it's succession planning. I don't plan on going anywhere for a long period of time, but after 25 years of doing what you're doing, sometimes you like little changes over time. So over the next 10 years, I'll probably have some form of change, but don't plan on going anywhere.
What does Brookfield look like in 20 years?
Look, the really exciting thing that we have is we have this enormous insurance business we're building, which brings us capital. We have an enormous pool of discretionary capital, which is just under 100 billion today, and it keeps growing. And then we have a manager, which it grows to, over the next 5 years, probably $2 trillion of assets. Those three things working together give us the ability to bring capital to the best in the world. Intel is one example, but we have many partnerships we're doing with industrial companies around the world, and it's really exciting because there's not that many people that have that pool of money to be able to offer it to the best in the world. And because of our relationships and clients, we can do that, and the whole thing working together is a very exciting place to bring capital, bring solutions of capital to companies.
Do you like the Berkshire Hathaway comparison?
Look, he's been the most successful investor on the planet, so everyone should be happy. Everyone should be happy with that comparison. But I think what we have is a little bit different. But we always try to copy the best in the world.
Bruce Flatt, thank you so much for your time.